In the metals quadrant today, a new all-time high in the gold futures contract. Gold hit that new all-time high before selling off midday and producing an outside range day down. This is the second consecutive session where gold started out with a new all-time high and then turned around and sold off into the close. Yesterday, gold finished positive versus the previous day's close, but not today. This outside range day will likely result in a small pullback, but it remains to be seen whether support will hold, as that's likely where the pullback is going. As a matter of fact, we hit there around today's close. The high today, 25.2250, up 1.68%. The low, 24.5310, down 1.12%. And with a little bit of time left in the session, we're down about 0.3%. On a weekly basis, we're looking at gold having its best week since the first week of April, up about 3.9% so far this week, and gold is still up almost 19.6% year to date. Today's U.S. non-farm payrolls weakness drove a flight to safety. That's where we went. Essentially 114,000 jobs added with a 4.3% unemployment rate, which triggered the SOM rule. The SOM rule is the rule that says if the unemployment rate rises by 50 basis points or 0.5% or more, that tends to happen, I should say, before a recession, and that is what's happened. So we got a bigger sell-off, and the market is now pricing in several rate cuts. I don't want to sort of anticipate or estimate how many it is until the overall volatility calms down. Also, the inverse correlation between gold and the US dollar took off today. The dollar had its worst percentage day loss since November 14th of last year. So that was obviously a tailwind for gold, but it is important that gold had an outside range day and a strong pullback to support. We'll see next week if that held up.